If I were to go back in time and have a conversation with any potential, seller and could give them some advice around how to set up their corporate structure, I would advise them to have a 100% owned pass-through LLC that in that entity, they have all of their personal, travel or automotive expenses, cell phones, put it in there, and then have an additional LLC that is the operating entity of the e-commerce store or the digital marketing agency or whatever it is, and keep that one super clean with no personal expenses on it. Because then you can render a profit and loss and a balance sheet at the operating entity level, free from any nuances of personal expenses, which you can still capitalize on in your holding company and get the tax benefit from that at that level. And it makes things so much cleaner and easier to get through due diligence and sell the underlying operating business entity, whatever it is, it's actually doing the work without having to go through all of this hassle of the addbacks. So you get the best of both worlds. You get all of those expenses from a taxable perspective, and you get the full benefit of the revenue at the operating entity level, which is transitioning over to a buyer.
Be sure to subscribe and hit the bell for notifications about new videos and interviews. And introduce yourself in the comments. Are you a buyer or a seller?